Hey, good morning, everybody. Got my monster, and it's the morning. Morning, David. Morning, Rez. Morning, Alan. Morning, Dan. Morning, everybody. Yeah, let's try to find something to make some money. Never ending chop in the market, driving me a little batty. Probably you too. We look at it on the small time frame, just sideways for weeks. Weeks. March 13th was a low. We had a good uptrend going. It was fun, it was exciting, and then we kind of came up just shy of the prior high from February, and we've just been chopping in this range on the S&P 500. It's been driving me a little crazy, I have to say. Hey, T-Brand, good morning. If you want to chat with me, make sure you're a subscriber. That's the only requirement. Just hit the subscribe button. While you're at it, you might as well hit the bell with the doodads, and so you get alerted when I go live. I'm going live again later today at 5 p.m. to do 30 minutes of your requests. I'll look at whatever you want to, and we'll talk about it. So make sure you're a subscriber, make sure you got the alerts, and you can come join Discord too. We talk about the market all day long, at least people that like doing that. Otherwise, I provide updates all day long, and I just try to keep on top of it. Stuff I see, stuff I don't. We've got a few things to talk about today. But before we do, all trading involves a substantial risk of loss. Don't do it if you don't have money to lose. Past performance, not necessarily indicative of future results. I may never get something right again. This presentation is intended to be informational, educational, and fun. It is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, you need to hire and consult a financial advisor who has a fiduciary duty to take care of you. Morning, Michael. Glad to have you. Morning, everybody. So, moving on to the calendar. Yesterday, we had the Empire State manufacturing numbers, and today, I didn't even reload this. Today, we've got core retail sales this morning coming in a little light, kind of bouncing the market around. Tomorrow, we've got nothing major. We've got some building permits and housing starts, a little bit of housing numbers. We've got FOMC members speaking all afternoon today. Be careful, that can just make the market go crazy and starts 10 a.m. So really all day we have a FOMC member blabbing. And they can make the market move with their comments. They're kind of oblivious to it, I feel like. So these housing or core retail sales numbers, we were kind of expecting a 0.5 and a 0.8 month over month, coming in at 0.4 on both. So really, that looks kind of flat and looks kind of flat. Actually positive right there on the retail sales. We don't have this one didn't give me the year over year, but I suspect, let's see, let's roll down just a little bit. We are on May. If we look back at May, pretty flat year over year. So nothing burger, right? Market just kind of chopping a little bit on that news, but what's it going to take to break us out of this range? I mean, come on. We just keep consolidating. It's driving us crazy, right? I mean, I'm sure you're trying to find something moving. I'm trying to find something moving. Just not a lot happening in the broad market. If you look at it, the ocean of the stock market, when we're trending up, we tend to float all the boats, or most of the boats, except for the crappy companies that tend to go counter trend. And when the market's going down, we tend to take most of the boats with us, except the strong companies that tend to go up. So, in the environment that we're in, where we're just going, it makes it tough, because your stock can do that just with the market. I mean, and we see that a lot recently. So zooming out to the S&P 500, all these alerts and stuff, we're just consolidating right at the top, just like I said, and just keep chopping. You see those little squigglies just chopping, not really, the range was bigger, now it's tightening up. That's probably squeezing for a pop. Is it going to pop down or is it going to pop up? That's the biggest question. And right now I feel like it's a coin flip. It was a coin flip back here. It's definitely a coin flip now that we've consolidated from like the end of March through the middle of May now. So a month and a half, we've just been sitting right here at the top, barely going higher, barely going lower. That's frustrating. We've got lots of events coming up, though. We have this debt ceiling debate thing. Are we going to pop? Are we going to drop? Are more banks going to blow up? If they, the moral hazard on a debt default is that all the debt instruments that are used as collateral by the banks and by even the brokerage houses and the clearing houses, all of that is based on the Fed's guidance for the safest risk-off asset out there, treasuries. And if the U.S. starts defaulting on treasuries, even though we'll probably pay them in the future, that blows up trades. We go into a liquidation cycle, and it can be catastrophic for the U.S. dollar. I mean, it really could be. So it's one thing to keep in mind is that this whole thing could blow apart very easily. This is not like 2011. There's a lot more, the house of cards is a lot bigger, a lot taller, and a lot shakier than it was in prior debt ceiling debates and in prior financial crises. Looking at the DGS2 right here, this is the constant treasury maturity rate versus the Fed funds rate. The Fed funds rate in orange, the orange line back here, the constant 2-year treasury constant maturity rate in blue. These two tend to fly parallel. Right now, the market, the open market, the treasury rate is leading the Fed funds rate down. The Fed funds keep raising ridiculously because every time we've done this in the last, since I've been trading, since 2000, basically, or since the late 90s really, every time these rates have crossed and kind of flown sideways for about 3 to 5 months, then we get a financial crisis of some sort. We had the dot-com bust, we had the housing bust, or great financial crisis bust, we had this interest rate inversion crisis in 2018. The Fed chases the market. You can see it on the way up, you can see it on the way down. They're always chasing the market. They think they're setting the rates, the market's leading them all the way. We've got a problem right now in that the Fed thinks that they're in charge. We're going to prove the market that we're in charge. Well, guess what? The market is dropping, and they're going to have to chase that rate at some point. Now, back in January, I did kind of speculate that we would see this go sideways and then maybe accelerate higher again. That's why these lines are drawn on here. So that is a theory that's I've kind of got sitting out there, is maybe we pause for a little bit and then accelerate higher again. This is entirely true, entirely possible, not true, entirely possible. And I drew them way out here because it's a weekly chart, but we may go sideways for just a short period of time, and then the DGS2, the 2-year treasury rate, may start accelerating again. That's something to keep an eye on. And that may not happen until after we get whatever debt default situation resolved. So keep it in mind, this is kind of a major thing. If the dollar blows up and we have this default situation going on, what kind of opportunities does that create in the world for other malfeasance? If our military is unfunded, and all the things we fund, if they suddenly stop being funded, what kind of opportunity does that leave for like Russia and Ukraine, or China to take over Taiwan, or some other unknown that we're not even watching right now? Something in Syria, something in there's all these little conflicts going on all over the place. And do people use that as an opportunity when we've got our back against the wall, paying attention to a default situation and banks blowing up and the dollar losing its prominence in the world because we let the debt default? This is kind of a dangerous game right now. So that can drop the stock markets. This thing going sideways for 3 to 5 months can lead to a financial crisis. That debt default could be the financial crisis, and then we could drop it out. So just be prepared. Right now, we have no clarity. Now, I am biased to going up, but the lack of motivation to go up and retest this resistance area gives me a little caution. It really does. So anyway, let's talk about what's moving today and what we can do. So let's reload this, grab the new list. S&P 500. This is ES Futures. Just kind of chopping here. We've got a little pop. I mean, It's almost like red, green, red, green, red, green. Every day opposite the last. The range just keeps tightening up. We're sitting right at the bottom of this range that we formed from all the way back here. And these highs from back in December, with the highs through February, with the highs through March and April, May. And then this kind of line right here was where we were finding resistance coming up, and now we're just kind of sitting on it right now as support. Can't really break lower, can't really break higher. It's just frustrating. And one chart that has been a little more clear is the NASDAQ chart. We do keep chugging slightly higher, slightly higher. I feel like this one is a stronger chart, showing that we're going to come up here and retest this August high on big tech. Right up here around 13,700. Now you might say, JT, in Q1, I've never heard of that. Unless the NASDAQ futures. You probably have heard of QQQ. That's the ETF that trades NASDAQ. That would be the way to play this in the regular stock market. So I keep track of the futures because they trade 3 hours a day. They only shut down from 5 to 6 p.m. during the normal workday, trading week, excuse me. And they're closed on Saturday. So they close down on Friday night, stay closed till Sunday evening, reopen on Sunday at 6 p.m. Eastern, and keep trading again till Friday. So they shut down for that 1 hour a day, but otherwise they're open and they provide a more clear picture. You can see, like S&P 500, when we look at this, the cash index here, we have a gappy hot mess, but when we pull up the ES here, these candles all connect and they're nice and smooth, and we see the more clear price action. So that's why I use futures, just to keep everybody informed what's going on. Now Russell, the three indexes I like: S&P 500, broad market; NASDAQ, big tech; and then Russell are small caps, consolidating at the bottom still. And the longer this hangs out down here, the more this looks like we may get a push right down to the 1670 area, this extension right down here. So it's kind of the way this goes. Small caps usually lead the market. So with the banking crisis, small caps got slammed. The regional banks are heavy inside the small caps, and this thing can flush out even lower. We can have more banking crisis, especially if this debt default thing doesn't get resolved. Remember, the majority of banks are using treasuries as their collateral. So if the collateral fails, what do? I've been seeing numbers that up to a quarter, of our 4,000 banks, that's like 1,000 banks are in a collateral crunch right now, where their treasury collateral is undervalued to what it should be. They can't liquidate it for the value that it should be worth, which creates a gap in their in their balance statement. If they're forced to liquidate, that means they got to take losses, which means bankruptcies potentially. And that's more bank consolidation. Now, here in the U.S., we do have 4,000 banks. The next biggest country has about 300 banks. So are we over leveraged 10 times on banks? I don't know. I leave that up to our capitalist society and different mentality than the rest of the world. So, CL oil still looks like it's going to push lower. We're seeing a lot of weakness. Drilling numbers for natural gas came in yesterday at the weakest level in a lot of years. It's the biggest drop we've seen in a long time in new natural gas drilling. And what do you get when you drill natural gas? You get oil too. So oil drilling also down, demand down. We're talking about buying some SPR, filling up the Strategic Petroleum Reserve. I think we could see prices drop on down, possibly as low as this $60 area, maybe even lower than that. But right now, not looking super bullish on oil. So GC also looking like it may pull back. Now you may be saying, JT, I hear that the dollar blowing up can cause gold to pop. Well, maybe. It doesn't have to. That's the historic thinking, the historic view. But gold has not been acting the proper way for a lot of years now. So be careful putting all your money in gold. Some swindler tried to convince my mom that that was the way to go, and I told her it's just not the wise thing. Gold has such a carry cost compared to some other instruments out there. You can believe in Bitcoin or not believe in Bitcoin, but it can be a healthy credit default swap. But right now, Bitcoin also looking weak as a risk on, risk off asset. Looks like it may travel right on down to the roadmap line here and get a pullback further to about 25,000, 24, 25,000 before the next pop. So just watch out. All right. Dollar just messing around here. Found resistance at this prior high from back here in April. Just messing around. It looks like it wants to break down. That's weakness hanging out below the roadmap line, sitting down at the bottom of the range. And that chart looks a lot like the Russell chart, really, in the last couple months here. So this thing can drop on down. While the Russell's consolidating down here, the dollar is consolidating up here the last 3 days. But we may see this thing flush on out. So let's talk about opportunity for the day, right? What might be opportunity? Now, one that wasn't on the scanner, but I wanted to show this to you really quickly. Check this out. Hershey dropping out yesterday makes a divergence on this CVD indicator. CVD, what's CVD? Cumulative volume delta. So looking at the volume and kind of doing a volume delta of buying and selling pressure, we are seeing a divergence on Hershey as it makes a lower low in price and a higher low in the CVD. This thing can pop off with a few green candles. We could see a quick appreciation back up into, say, 280 area. Right up here, new high, possibly. It's been pretty strong and got hit yesterday. Maybe it was for a good reason, maybe not. But I see it still a strong relative daily candle here, or daily chart here. That big pullback can lead it right back up. So I am expecting it to retrace to the roadmap line at some point, but short-term opportunity has a high divergence on that, and it may just chop in that range. That's why a little pop up to that 280-ish area could work. COF. Nice pop here. Capital One Financial on no news, really. I mean, no earnings. We'll see what happens here. Capital One, I mean, that's a bearish chart. It's a bank. It's a financial. It's dangerous at this point. And the chart says it's probably going lower. They've been disappointing on earnings, even though they make some money. They've been disappointing for a while. Disappointing. Caution. NVCR, Novocure, medical specialty. This doesn't look too bad right here. Let's see if I can. And we're coming up to resistance. Came up to resistance. If we can pop on through, that'd be okay. Let's run the bigger fib for the retracement to the lower low. Yeah. Funny enough, that's probably going to be the limit of the upside. At least get a retrace in that area. So could get $10 more. Then I would be cautious. Otherwise, sideways. I mean, it's been sideways for 2 years. Well, working on a year and a half. That's not bullish. That's not bearish. It's just sideways. So more chop in the range. You know, the range is pretty big, 50 all the way up to 120. I mean, $70. That's a big range to make some money in without it even going anywhere. So you can play the chop, but I wouldn't expect a big trend until it breaks out through resistance. GDC, that looks like that's classic bubble type action. Come back to the lows, and I mean, it's kind of the same thing you got here. A little bubble, came right back to the lows. Doesn't mean you can't make money on the moves, but that looks like a horrible chart. Looks like the market just opened. VKTX, another pharmaceutical major. Nice run here, but at some point, it's probably going to find some long-term resistance right here at this prior high. It's kind of slowing down as we get there. It's got to break out through that to go on a run. The run could be much higher. Could be up to 30, even 38. Right now, not the kind of stuff I like to trade, though. I like to trade things that are more clear. Beam, that looks like a pretty horrible chart despite the gap up. And just don't chase horrible stuff. Like, I mean, when the charts look bad, why do you want to get into it? Why do you want to buy the bottom? Like, this can go lower. This can go, you know, we could lose 50% here on EXPE. I mean, this chart right here just showing a consolidation, potentially a pop-up into the roadmap line, and then we could go lower. This is entirely a pattern for going lower. 70, even 57. I mean, easy to cut this thing in half. Next up, DAC. Again, trying to break out. Just wait for him to prove it. We have resistance right there, right up to resistance. If it gets above the resistance, great. You can catch a run. But if we're just trading into the resistance, you should be looking for an exit here, not for an entry until we're above here and stay above here. So just please be careful on this stuff. Like, these things can all go lower. This one can cut in half again. WAL, Western Alliance, you know, this one keeps making the news as a potential going on a business sale. Please be careful. Please, please, please. There's another one that's on shaky ground, and we can make a lower low very easily. This doesn't have to recover until the banking system gets it all clear. PHIO, another pharmaceutical, getting a little minor pop, but that's still a downtrend. I mean, look at this big downtrend. With a split in here, reverse split, 1 for 12. Reverse splits aren't bullish. That's going on down. Just looks horrible. HCNP, now there's a drop. Big choppy mess of a drop right there. SGEN, probably going to retrace to the roadmap line. Another pharmaceutical, ARGX. Finding resistance at the prior high. Probably going to retrace back to the roadmap line at the minimum. If it breaks out, it can go on an extension. Just keeps, you know, finding resistance. Once, twice, 3 times, 4 times, and pull back. HD, another one with an opportunity to make a bottom. I was looking at this pre-market here. If we zoom this up a little bit, and check this out. We had these lows back here, and if my bar wasn't in the way, we made kind of a divergent bottom here so far with this lower low. Talking about price being lower and this CVD down here being higher. Can't see it great, but it line right there. Whoop, it goes off the chart. Awesome. So it's a divergence in the CVD and in the price. If we get some green candles, takes 3 in a row at the minimum to get long, that thing can go higher. But if it continues lower, the CVD makes a lower low, all bets are off and can just keep going lower. So it's just one to keep an eye on. If we get 3 greens, this is a 30-minute chart, 3 green candles in a row, that can be the sign that we see a reversal off this downtrend. And it could be potentially strong. So one to keep an eye on. APLS, jump back out to the daily. That looks like a choppy hot mess of yikes. That thing can definitely come right back down to the roadmap line. It's like big spike up, can come right back down. Looks like they lose a lot of money, so be careful on that one. DCO, yikes. And on down. Yeah, sorry if it sounds like the train's in the room with me. Train passing by, honking the horn, blowing the whistle. This one definitely looks like it can go lower than the prior low. Aerospace and defense, but not looking great. SE getting slammed, but right back to the roadmap line. Classic. Rejection on the high, right back to the roadmap line. Can it hold support right there? above this prior low. If it can, then breaks up, then it's more likely to get an extension out to 93. Otherwise, we don't hold support here, probably going lower low. That lower low could look like, thank you, IWM. Lower low could look like, something like down to 67, possibly 62. Return to those lows over there. And that's just looking like that thing projected off of this right there, slightly lower low. And if we break that extension, 67, 62. OMH, just a choppy hot mess and not enough history to really do much on it. I'd be careful if I was trying to chase that one. It does not have to keep going. That can be a bubble type situation. I mean, you see the high went all the way up to 56, and then it can come right back down where it was at 5. Ouch. Lose 90% of its value from the highs back down to where it's been. I mean, that was a great play. 10x your money right there, but if you stayed in, that can be cut your 10x money right back down to where it was. Lows, chopping in sympathy of Home Depot. Got their earnings coming up next week. So just flying parallel to Home Depot right now. Home Depot's down, Lowe's is down. Just kind of like the story of the economy, you know. You got two companies that basically do the same thing. Not exactly the same thing, basically do the same thing. If one of them reports earnings early, before the other one, maybe doesn't put the most impressive numbers, like, oh, we surprised to the downside by $1 billion, even though we slightly eked out a little bit a better profit. Well, that outlook is like, oh, we're in the same industry. It's going to push the other one down. Lowe's can surprise, though, and be like, hey, guess what? We made a crap ton of money, even though Home Depot didn't. We took all their market share. So maybe not the case, but they don't have to fly exactly the same pattern. Just keep it in mind. All right, that's kind of the list for the day. So my expectation, unfortunately, more sideways. That's just what we got right now. It's just sideways. We're just consolidating. We keep consolidating until some sort of resolution comes to some sort of news in the market, one way or another. We have lots of threats sitting out there, and a lot of people don't expect upside because there's not a lot of positive right now. So that's why I see it as a potential path forward, because nobody's really expecting upside. This thing can go super squeeze, it can go crazy, break out higher, scare a lot of people, FOMO, all that sort of stuff. But we're not there yet. We're not breaking out. We haven't been able to break out, so the market hasn't proved anything. I would definitely be cautious. Cautious. SMH I talked about during the crypto power plays, and that one is primed. We start breaking above this 128 level, 135, 139 on the upside. It does look pretty strong. Has a potential going up. Cheaper way to play, SOXL. This one's got to get above that 1850 area for me to really consider it. You could play 16 to 18, $2 on a 16. That's pretty good return. Even aggressively buying here with your stop right down here around 13, I would be very cautious. But that one can go. It can get the extensions all the way up here, 22, possibly 25 if we really got bullish. This is a 3x bull, so do be careful on that. Does not have to just go crazy. So SMH, it does look kind of positive. And then NVIDIA working on breaking out higher. It does have a lot of resistance right here. It's been sitting on this. There's a fib line right here. It's just been sitting there for a while. And then AMD also looking strong to get that pop up to 110 area at the minimum. So, all right. What do you think FOMO will do to the market today? Today, no FOMO. Just sideways is what I expect. Unless something crazy happens, just more of the same. We're just waiting. Everybody seems to be waiting. Now it can just suddenly start breaking out and going, and everybody be like, oh my God, what's going on? and start chasing it, but that's going to lead to a big retrace more than likely. So just be careful. I expect more of this chop in this range. We're not, I mean, we've been here for a month and a half. There's no reason to expect it to break out and go at this point. No reason. Other people may say differently. The market's going sideways until it proves different. And right now, there's no proof that we're going up or down. We've held the lows twice here. We've held the highs 1, 2, 3, 4 times. There's just nothing that's going. I mean, we don't have any major news coming out. We've got Fed members speaking today. That can lead to pops. That can lead to drops. Everybody's going to be trying to, in an environment like this, everybody's trying to pull meaning out of things that are meaningless just because there's no direction. There's no guidance. And that just leads to more chop because, we're all bullish one time. We're all bullish. Everybody's trying to rip everybody. The algos are out there trying to take everybody's money. It just leads to chop. Chop is what nobody expected, really. You had a few pundits calling for a big up. You had a few had 90% of pundits calling for a big down, lower lows, recession, blah, 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 blah. Not many people were calling for sideways. Sideways is what we're getting. And that's what's frustrating the most number of traders. Remember, the market's going to do whatever it can do to frustrate the most number of traders. Sideways is that thing right now. But I would be careful being aggressive on any kind of credit spread. Iron Condor, be careful on that because the volatility can increase again. We can see a big swing. The swing could be bigger than the prior swing, and go for those Iron Condors. I think that's what you saw. A lot of Iron Condors get added right here when we went sideways, and then the market got a little volatile and went and got them. Go get people's money. Go stop people out. That's what the market's efficient at. All right. So be careful. The VIX has not returned to the low, but it's sitting, hanging out right down in the vicinity. It may push lower again. I'm not chasing VIX on anything right now because it's just not a clear pattern. SVXY keeps drifting higher. We're not making higher highs yet, but could happen very soon. Very, very soon. I'll set an alert up there. All right. So make sure you're a subscriber. Hit the alert for the notifications. Turn on all notifications. I'm going live at 5 p.m. this evening to do 30 minutes of your requests, plus give you a little more market analysis, a little more big picture. And if you want to chat with me all day in Discord, links in the description. Costs like $5 for 3 months, and it's worth it. A lot of people say it's worth it. We cover all sorts of market analysis, all sorts of trades, all sorts of stuff. So if chatting about the market's what you like to do, come join us. Otherwise, I'll see you later. Have a great day. Be safe out there. The account you save may be your own.